Code the magic business loan approval formula. Look, we've helped 50,000 business owners through the process of getting business credit and financing. And what we found is a clear secret formula that lenders have that determines if you should get approved or not. Today, we're going to decode that. We're not going to talk about fundability. I talk about fundability a lot. We're going to talk about everything to do with the 4 C's that lenders really look at, including the character of your business and what you can do to improve each aspect that lenders really look at and scrutinize to have the best chance of getting approved, but not just getting approved. My goal is for you to get approved for more money at better terms. And that is the formula we're going to decode today. If you get this right, not only will you turn what could have been denial into an approval, but you can also get approved for more money and lower interest rates and longer terms. So this is what gives you lower payments. But there's a secret formula to get this done, and that's exactly what we are going to decode today. So let's talk about this magic formula. First of all, lenders just want to know that you're going to pay them back, and you have to keep that in mind. Every income document they ask you for, every question they ask on an application, every search they do, credit report they look at, everything that they're trying to determine comes down to one. Everything they're gathering is to determine one thing. Are you going to pay them back? How likely are you to pay them back? It's really even what credit bureaus are there for. A large part of what credit bureau data is used for by lenders and credit issuers, at least, is determine the same thing. How likely are you to repay somebody if they actually lend you money? So lenders look at one of 3 things to determine the approval: cash flow, credit, and collateral. But there's also a 4th C, which is also known as character. And this is like the reputation of your business. Okay, so if you have a stellar character, well, then that radically increases your chances of getting financing. So these are these 4 C's that we're going to decode today. Now, I oftentimes talk about the 3 C's: cash flow, credit, collateral, and how just knowing which of these is your strength will help you determine what kind of money you're going to get. But today we're going to talk about the 4 C's and what you need to know about each one of these C's to improve your overall chances of getting approved for financing at the best terms for the most amount of money. So if you don't mind, if you're just coming in, give me a shout out, say hello, tell me where you're coming in from. I always like to say hello. So if you don't mind, say, hey, Ty, hello from, Brilliant Davis has got it. Hello, Ty, Unbound Business Solutions, LLC out of Tucson, Arizona. See that? And I just got a chance to plug his business, which is why one of the reasons he's making sure that it's available. Okay, and Danielle, hey, thank you from Lawrenceville, Georgia. I always mess up your name, and I apologize for that, but I appreciate you coming in from YouTube. So give me a shout out. Tell me where you're coming in from. I always like to say hello. So the more of these C's that you get right, the more funding options become available, and the better terms you're going to get, the more money you're going to get approved for as well. So what exactly does this mean? Well, let's talk about the first C, cash flow. Well, you need to manage cash flow properly. So you've got to consider future financing needs when purchasing assets that could be used as collateral as well. We'll talk a little bit about what this means. So you also got to come in and build strong business and personal credit. If you have credit issues, you got to work to fix them. And we're going to talk about this today as well. So first of all, let's talk about cash flow. You got to get paid. And one of the biggest mistakes I see business owners make is that they say, I'm reinvesting everything into the business. And I'll be honest with you, what I've learned from running cash poor to cash rich is that when somebody says, I'm putting the money all back into the business, they're really having cash flow management issues. That's what it really comes down to. There are issues with figuring out how to manage the cash flow where you can set aside profits and actually have enough money still to continue to grow the business. Now, this is known as Parkinson's law. And what Parkinson's law says is one of the most valuable lessons you may ever learn in business, or actually in life for that matter. And what Parkinson's law says is it says the demand of something is always going to increase to match the supply. Now, you've seen this before, right? Maybe you make an extra $1,000 or $2,000. Maybe you cut $1,000 or $2,000 worth of expenses. And now you're like, yes, I have $2,000 I can spend on X. But then all of a sudden, your car breaks down, your tire goes flat, the air conditioning goes out. That $2,000 you thought you had to invest in X goes away immediately, right? We have the same thing with time. Let's say we cut time out. Let's say we delegate time, delegate tasks to somebody else. We automate tasks. Now we think, okay, now I've got an extra 5 hours a week. And then all of a sudden, all these things happen to eat up the 5 hours. This is Parkinson's law. The demand is always going to match the supply. And this is what happens with a business. The problem is that if we don't put aside money and not touch it, that is our profit, then the business will eat up every bit of money that it has. It will have demand for that cash will always be equal to the supply of cash you have. And there's a great book called Profit First by Mike Malowitz. Michael Wamakowicz. I'm not even going to try. I always mispronounce his name. Okay. But I can tell you that a lot of accountants around the country follow this exact same philosophy. And what it basically has and says is that you're taking the profits you want to set aside, 5% profit margin, 10%, 15, 20%, you determine, and that's going in a profit account that you don't touch. That's for distributions, and that's for you to come. That's for you money that actually gets paid out to shareholders. That's the profit of the business, unless you choose to reinvest it. So at Credit Suite, we have the profit account we set aside, and then at the end of every quarter, we determine, do we want to use some of that profit to reinvest in the business, or do we just want to leave it there to distribute to shareholders? But at least we have the choice. We're not letting the business consume all of that money. So you've got to follow this profit first mentality to be able to actually manage cash flow properly. And here's what it tells lenders. What it tells lenders is that you can manage cash flow properly and manage the business properly. They see you have secondary accounts with cash that's increasing. And that's a healthy business, right? A business that has its operating account where income comes in and expenses are paid, and then money is set aside in a profit account that grows. That's what lenders look at as a really positive sign. And this is where you get to a point where you're probably going to have to start paying taxes. And that's what lenders like. They like to see that you're profitable. They want to lend to profitable, successful businesses. Now, instead of paying yourself out of the leftover when there is nothing, you've got to determine, to make this work, a percentile of the cash that you're going to set aside. It's called a profit margin. So you've got to decide what that margin is going to be. And it's scary at first. The first time Credit Suite ever did this, we're like, oh, let's start at 5%. Like I'm freaked out by 20. But then within a year, we grew it to 20%, and we live and die by our margin. And what I mean by that is that we will lower expenses. We will do whatever's needed to raise income to make sure that we have that 20% margin. Now, don't get me wrong. We have months where we lose money. We've got months where we make more than 20%, but we always try to make sure that we live and die by that 20% profit margin. Yours doesn't have to be 20. It could be 40. It could be 10. It could be 5. You could start small like we did at 5 and increase it, but you've got to set aside what percentage you're going to, or determine what percentage you're going to set aside. And then you've got to start setting that money aside. Now, look, it's going to be scary because to be able to put money aside for profit before you pay bills, that freaks a lot of people out. Okay, but you got to remember what's happening here is you're creating a reserve cash pool, and that cash pool is essential for lenders to see that you're managing money responsibly. And this is where business credit portfolio can come in. By using credit to actually pay a lot of your expenses, then not have to actually be able to take all of your cash flow to pay them, then you could better manage your money. And in doing so, when you have larger amounts of money come in for certain months, you can use it to pay off that credit and still be regularly setting aside the money that you need to set aside. Okay. So that being said, I want to give some shout outs here. Hello, Theo Sanders, Rockford, Illinois. Appreciate you coming in. Regina from Lancaster, California. I'm a startup business that will provide car rental services. I love that. 95% ready. The only thing I'm lacking is my first car with only $1,000. Here's where I'm stuck. Well, okay, that's not hard to do. Actually, Regina, you can actually get auto financing 2 different ways. You could just do it personally to get an auto loan, but you can also build business credit to get an auto loan. If you have about 14 accounts on your business credit reports total across all 3 bureaus, 3 with DMB, 5 with Experian, for example, the rest with Equifax, that gives you the 14 accounts that you're going to need. You can get an auto loan without a personal guarantee or credit check. You can get it from Toyota. You can get it from Ford. You can get it from GM. You can also get it from Ally Bank. Those are all really good sources for you to be able to get auto financing and do it in your business name without a guarantee and without a personal credit check. And Jesse from V's Art Collective, LLC, El Paso Robles, California. Ready to work. Thanks for coming in. Bear. This is my Pomsky. My other dog is the vet, so she's losing her mind. So if you hear a dog screeching, I promise you there's no torture going on. She's just sad and she's lonely because her friend is gone. So that being said, Bear, we're hosting a training here. They wanted you. I know. It's okay. All right. So everybody, thanks for coming in. D'Angelo McKinney from Georgia is in the house, and Cornisha from St. Louis, Missouri. Thanks for coming in and saying hello. I really appreciate everybody saying hi. Okay. So why you need a cash pool? You have to have access to cash when you need it. Okay. This is why you build a cash pool. Now, you might have that money set aside for profits to be able to reinvest in the business, to be able to take out and put in your pocket. And as entrepreneurs, it is what we're here for. We get so caught up in our cause and our mission that we forget to put money aside for our family, which is what we really should be striving to do. But the other thing is again, you're building a cash pool that helps make you more lendable. And if stuff ever does hit the fan, then you can access that cash pool as needed. So perfect example. At Credit Suite, we had a shakeup last year on our sales side, and we knew that we needed to bring in a new leader to lead our sales team. Whenever you bring in a new leader, a lot of people are going to be out the door, whether they're let go or whether they quit. Something that we're not used to is having high turnover here at Credit Suite. So when that happens, that lowers sales, right? Until you can rebuild the sales team, change the culture to the new leader. So when this happens, then we have several months where we're losing money. Now, for a normal company, if you're losing, I don't know, 20 grand, 50 grand, $100,000 a month, that'll really freak a lot of people out. But for us, it doesn't freak us out because we've got cash pool that we can dip into. We know that we can lose money for the course of a year and then some and still be okay. So this is where cash pool gives you that peace of mind. When something like COVID happens and it affects consumer confidence and people immediately stop spending to see what's going on, with an impending recession and all signs indicate this is going to happen this year or next, then all of a sudden, again, consumer confidence drops, people back off from buying stuff. A lot of people's businesses slow down at that point. So if that happens and you have a slowdown, you lose money month after month, how many months can you go and still stay afloat? This is what cash pools will actually help you do without damaging your personal or business credit because you start going late on all of your bills. So how do you do it? Well, there's three parts to building a cash pool. You've got to have cash on hand. You got to have cash available to spend on vendor credit accounts, and you have to have cash available to spend on business credit cards. Really, there's a lot of ways you can get money, but these three are the best. The money you've set aside in a profit account is cash in hand. Then you've got money through vendor credit accounts. You've got all this vendor credit, so you can get credit with Staples and Amazon and Walmart and Dell and Apple, HP. So you can get credit for those things and finance over time instead of paying all the money right now. And the third is cash available to spend on business credit cards, stuff that maybe you can't buy in stores. Maybe you need a Visa card for it, or you need a MasterCard for, or maybe you need a Visa or MasterCard. You can liquidate and take the cash out to buy properties or whatever it may be. So again, three main parts to being able to have access to the money that you need to be able to build a cash pool. And see how this works is that by being able to leverage credit, business credit, Visa card, MasterCard, vendor credit, then what happens is that helps us have more cash on hand. So we're just using OPM, other people's money, to be able to help us manage the business, put more cash aside, have a lot on credit. A lot of our businesses are growing. They're bringing in more money. So being able to pay for whatever we're buying on terms over time gives us the ability to get more revenue in the door, to be able to pay off the credit and still be creating a cash pool by putting other money on that cash in hand in that separate account. So you got to have the cash reserves. You got to have the vendor account. So we talked about profit first and how to make this work. The other thing you really want to start doing is you want to start building business credit and getting credit with vendors that you can actually use to fuel the business. So for example, as I sit here now, I've got water, which I can buy on Amazon. I've got a ring light here. I've got speakers and 2 different monitors and all kinds of things that I can buy in any number of different places, right? I can go to Staples to be able to buy a lot of the hardware that I need here, the speakers, etc. I can go to HP, Dell, or Apple to actually get my monitors, to get my computers. I can go to Amazon here to get my camera. So most of the stuff that I'm using, everything on my desk right now, 100% of it, besides my number one dad for my kids. See, if you're a dad on here, I'm number one. You can be number 2. My kids already designated me as number 1 here. But outside of that, I can buy everything here using vendor credit. And what happens is 2 things. First of all, when I use vendor credit to buy stuff that I'm not taking from my cash reserves, it gives me more money to set in my accounts and it lets me pay for these purchases over time. Okay, if I'm going to get a second monitor like I have right here, my anticipation is that this monitor is going to help me be more productive and make more money. Okay, so I get the monitor, then it helps me be productive, make more money. Then as I make more money and my revenue climbs, then I'm able to use it to actually pay off the credit that I got to actually buy it. Now, by the way, I've mentioned this before. This is how all the biggest companies in the world operate, just so we understand. Okay, it's not like I'm telling you to take your cash, put it aside, and buy everything on credit, and then you're like, what's going to happen? I'm going to bury myself in debt. Guys, this is how the biggest companies in the world operate. 80% of what Walmart sells on their shelves is bought this way. They use credit, they buy the stuff, they take your money when you buy it from them, and then they pay off the credit. It's why they're the number one retailer in the world. They oftentimes come in and show the Apple example, right? So let's look at Apple right now. Let's just see where Apple is. Apple debt. Okay, if we look at Apple's debt, we can see here they've got what, 124, that was end of 2009, $124 billion in debt. But now look at this. If we go to Apple and we say cash on hand, then we also can see that Apple is sitting on whatever, I don't know, cash and investment and billions. Let me see if we can figure out how much cash in hand in 2021. No, that doesn't look like it. So let's see if we can figure it out. So there's about 100 billion. So last time I checked, 195 billion in cash on hand. And this was 2021. So why do they have 195 billion cash in hand, but yet have 124 billion in debt, right? Okay. A lot of Dave Ramsey fans will say, well, that's a pretty simple equation. Take the debt and pay it off with the cash. But there's a reason that Apple is the biggest company value-wise in like the world. It's because they manage other people's money very well. And I could do this with Google. I could do this with any of the largest publicly and privately owned companies. They're as big as they are because they manage it this way. They're using debt to grow the business. Okay, debt financing, credit cards, loans, credit lines. They're using debt to grow the business. And then they're saving their cash for other things like acquisitions and other things that help the overall enterprise grow. That's how they all operate. And that's exactly how you should be doing it. Now, the second benefit here is beyond helping you put cash aside and better manage cash and invest to buy the stuff using credit that you need, then that stuff makes you more money. Then you use the more money to pay off the credit. The second benefit is you're creating a history for the business credit reporting agencies. You're telling the actual lenders, the credit issuers that in the future will lend you money, that you're getting credit and you're using the credit to grow the business. And when they see that, they want to give you more money. Okay, a lot of people through the 2008 mortgage crisis saw their credit cards limits drop dramatically to what they owed because lenders needed to tighten up. They needed all the available credit they could get. And if somebody has $50,000 in available credit and they only ever use $20,000, then they're going to pull back the other 30 to lend to somebody else that will use it. The bottom line is lenders and credit issuers won't raise your limit on credit cards if they just sit there and are never used. But if you use your credit cards regularly, you'll oftentimes see they voluntarily offer you raise your limit, or if you solicit them, they will. The reason for that is they want to get money in the hands of people that is going to use it. That's how they earn interest. That's how they get paid. So when you show lenders and credit issuers that you're getting credit, you're using credit, and that's how the business is growing, that's where they want to give you more money. And by the way, that's why people like Michael Dell are able to get $100 million credit lines for their business and not attach a personal guarantee. Because if you look at Dell's credit report, you see hundreds of trade lines, you see 100,000, you see $1 million credit lines. So they've got this big history that they've grown, showing lenders and credit issuers that they can manage money responsibly. Then lenders and credit issuers want to lend them money. So if we want to be big, then we need to follow exactly the same system that the biggest companies in this country are following to be able to be successful. That is exactly how we can be successful as well. And Cornisha from St. Louis, Missouri is in the house. Kevin Gifford, thank you for coming in from Lake. Where did you say you're coming in from? Lake County Mortgage. I appreciate you saying hello. A Diamond Royal Logistics is in the house as well. And Bella, we've got Bella here from Coral Springs, Florida. How to obtain more business credit to build wealth. Yes, that is what all of this is about, is building wealth. And Mark says, I would like to start an Amazon reseller business. How can I make credit work for me? Well, there's a lot of different ways, Mark, and we'll talk about that a little bit today, and I'll give you just one insight when I bring this up. Regina says they've done a video talking about getting a Turo fleet going. Look at that one, and she's right. If you are interested in getting a vehicle on the road for rental purposes, we do have a great video on our YouTube channel, youtube.com/credit suite. You just type in Turo. It's everything you need to know to be able to launch your own Turo business. And Mark, when you talk about being Amazon reseller, this is exactly how you do it, is start building business credit. And in doing so, that helps you get the money that you need to actually buy the inventory. Another great source that you want to check out is this. Once you get your business going, you want to go to creditsuite.com. You're going to want to write this down, inventory. And when you do this, go to creditsuite.com/inventory. You're going to get a special link to Kickfurther, and Kickfurther will actually crowdfund 100%, Mark, 100% of the inventory for your business. But there's a catch. You got to prove your concept first. Once you have 150,000 in total sales in your Amazon business, these guys will then permanently solve your problem by actually financing 100% of the inventory that you need. So instead of you paying cash for the inventory, they'll actually crowdfund to get the money for the inventory. Then you pay them back as you sell the inventory you get. Pretty cool longer term solution. But again, pay attention to this today. We're going to talk about ways to get financing and business credit that will help you at least get the business off the ground. Okay, so cash available on business credit cards, right? Well, let's go back here. Okay, so we've talked about vendors. We also want to talk about business credit cards. Look, there's stuff that we can't buy at Amazon, and I can't think about much, but there is. There's stuff like payroll. There's things like marketing that maybe we can't buy in those places. Facebook ads, for example. We need business credit cards. We need Visa cards. We need MasterCards. We need American Express cards. And these help us get the stuff vendor credit accounts don't help us get. And again, it helps us to be able to put more money aside to grow the business and then be able to rely on credit to help us free up cash flow to actually grow the business. Now, again, most have fraud protocols. So you got to avoid paying for fraudulent charges. And that means you've got to be able to keep an eye on your actual accounts, make sure that nothing hokey is going on there. Okay. Otherwise, this can actually get you into some trouble with these kind of credit card issuers. So that being said, you also want to manage cash flow with your cash pool. So cover cash gaps, take advantage of bulk discounts, extend credit to your own customers. So there's a lot of things here. When you have cash on hand, you just have more opportunities to do things. So I'll give you a simple example. Somebody just messaged me. The last message I got before I fired this up was, hey, we can purchase 4 domains right now, as you said, and I could get a 21% discount. But if we buy 6 domains, we get a 40% discount on the entire order. So I said, yeah, here's 2 more domains to get. That's what happens when you have cash on hand. That's a really simple example because domains aren't very much money. But this happens all the time, is that when you buy in bulk, you get discounts. So we do this with every one of our software providers. In a lot of cases, we pay them in advance and we get upwards of 40% discounts on the software because we pay them in advance. We buy things and instead of buy one, we buy them in bulk and we get bulk discounts. But you can't do that unless you have access to credit, unless you actually have cash on hand, whichever they'll accept to be able to do so. Okay. So, and it also helps you extend credit to your customers as well. And this is something you want to consider. So, for example, there's something called AR financing, account receivable financing. And with AR financing, you can let your customers pay you on terms, and then you actually can go to an AR factor or lender, most of that money right away. Up to 90% of the money they owe you, you can get paid right away. There's even companies out there that will finance your customers for you. We're experimenting with one right now. I'll give you an idea of the results. Actually, this is kind of how crazy this is and how good you can get your business dialed in. We just designed an algorithm that actually tells us the likelihood of a customer defaulting. So we can actually predict with 90% accuracy, somebody is going to stop making payments before they stop making payments. And as a test, we went to those same customers and said, hey, we have an opportunity here to be able to dramatically lower your payments because we've got a company that's now doing financing for us. A lot of people went with it. Last time I checked, we had 16 approvals, and we just sent out one email to a pretty small select group of people. So what we found was that nearly 10% of people responded of a high-risk group and said, yeah, I want lower payments. Can you do that? We sent them to a finance source. The finance source gets them approved. Now they will pay the finance source, and the finance source gives us all of our money right away. So we take somebody that's a high risk of default and not making any more payments, and then all of a sudden we got a one pay from them from the finance source, and they got lower payments from the source moving forward. Everybody wins. So whether you're using AR factoring where somebody can pay over time, which helps you attract more customers because your payments are cheaper, you're letting them pay over time, and an AR factor gives you 90% of that money right away, or you're using an outside third-party service to actually do your financing for you, these are options that will help put more money in your pocket and also help you attract more customers because you make it easier for them to pay as well. Now, the next thing you want to do is you want to make sure that you're working on improving your business credit. You always got to pay your bills on time or early. Your main credit scores in the business credit world are based on how you pay your bills. So that means all you have to do is one thing. Pay your bills on time or early. So whenever you can pay a bill that reports to the business credit reporting agencies after whatever you ordered shipped, then you want to pay it. So if I order it, if I pay it before it ships, if I go to Uline and I order $200 worth of stuff, and then I immediately go pay that account before it ships, Uline will consider that to be a cash transaction and won't show that on my business credit report. But if Uline says your items just shipped today, and then I go in that day or even the next day and pay that, then it shows me paying it very quick, and that helps me get better business credit scores. Why does that matter? Because business credit scores are directly linked to the interest rate you pay. So if you're getting money and you're paying too much interest on the money you're getting, you got to focus on building your business credit and paying your bills on time or early. That's what's going to get you lower interest rates, okay? So that could be the number one issue on why you're not getting approved for as much money as you like at better terms, is you've got to come in and you've got to make sure that you've got good business credit scores because you pay your bills on time. And you also need to make sure that you understand how your business credit reports work. Tax liens, judgments, you want to keep off your business credit reports. UCC liens don't adversely affect your business credit reports, but you should know how they work. We've got a YouTube channel video on this as well, youtube.com/credit suite. They'll teach you all about UCC filings. Okay. Business credit isn't as much about utilization and all these other factors. It is in large part about how you pay. Now, if you've got negative items on your business credit reports, and this happened, I've used this example a few times because this just happened about 3 weeks ago, where one of my friends, my ski instructor, Wes, actually called and said, hey, like, what's going on? I just tried to get an auto loan and I just got denied in my business name. They said my business credit's bad. What do I do? I said, you pull your business credit reports. Go to creditsuite.com/monitoring. It's $24. Get all 3 reports. See which bureau has the issues. He said, I got it. It's Experian. Here's what happened. I got 1 positive, 1 negative. The negative was bogus. What do I do? I said, first, 2 things. First thing, dispute the negative with Experian. Get their credit monitoring. And again, we've got something on our YouTube channel that teaches you the step-by-step to fix business credit with every one of the reporting agencies. YouTube.com/credit, YouTube.com/credit suite. That's all, everything you need to know to fix damaged business credit. But like I said to Wes, I said, but you understand the problem isn't that negative. The problem is that you only have 1 positive. If you had 9 positives, which you should 5 years in business, have 15, 20, then the 1 wouldn't even matter. So the problem is you don't have enough positive. You got to continue to build business credit. You've got to never stop. Building credit for your business is as important to your business's ability to get money as your personal credit is for your personally to be able to get money. You got to build your business credit. So by adding a lot of positive, by keeping an eye on your business credit reports, and by disputing any negative, that can help you go a long way to repairing damaged business credit. So you get those negatives off, you add more positive on, and that's really the key to having good business credit profiles and score. Now, trade references can help. We call these advanced vendors. Advanced vendors like Apple, John Deere, amongst many others, don't actually, and I'll show you a bunch of advanced vendors. These guys don't report to a business credit reporting agency, but they can still work for what's called a trade reference. So when you apply for a lot of credit, even loans, they ask you for trade references. And if you have a trade reference from a place like John Deere or Apple, then obviously that goes a long way to helping you get approved. So don't forget, and a lot of these overnight gurus in the business credit space, okay, don't talk about these accounts because they don't help you build business credit, but they will help you build your business. This is real usable credit that will help you grow your business. And in using this kind of credit, you again keep more cash in the bank, you finance a lot of the things you can finance, and at the same time, you gain trade references. So even though they don't show on your business credit reports, what happens is they will go a long way to helping you get approved for loans and credit lines because you can use them as trade references. And look at how many people are in this category. Now, this is our business finance suite. This is the step-by-step system that we use to help business owners build business credit. And it's also our partner program where we help like loan brokers and partners offer business credit financing. And these are all advanced vendors. Okay, these are all sources that will give you credit when you have none. Okay, and they don't report it. But again, the nice thing is they will give you trade references. Places like United Airlines, right? Look at all these banks that we have in this category as well. Central Bank, credit unions, okay, Ultra Federal Credit Union. So a lot of different banks, a lot of different vendors that are in here. A lot of places like O'Reilly Auto Parts, USA Scientific that we're all familiar with as well. Okay, People Ready, MedX, John Deere, Navy Federal Credit Union. So just a ton. American Express Gold, Best Buy, Wells Fargo, Barclays Bank. There's just a ton of sources, UPS, in this world that will help you get credit when you have none. They report it to the business credit reporting or they don't report to the business credit reporting agencies, but they'll give you trade references, which will also go a long way to helping you get approved for credit and financing. So don't forget about these advanced vendors. Now, personal credit's different, right? Personal credit's affected by like 5 different factors. You've got you like 5 different factors, including payment history, utilization, inquiries, your mix of credit accounts, how long you've had credit for. But you really want to work on improving your personal credit, because in doing so, this goes a long way to helping you get approved for credit and financing as well. Okay, and I want to give some shout outs here. Thank you for sharing this. I appreciate it. Whoever just showed Casey Bell. I don't actually have your name here, but thanks for sharing. Love your content as always. I appreciate you saying that. Thank you so much. And thank you very much. Just subscribe. Thanks for subscribing. By the way, if you're getting value, hit the like button. Hit the subscribe button. When you hit the like button, you tell other people how valuable the information is, and it just helps us help more entrepreneurs. So you got to keep in mind that a lot of these factors, there's things you could do in every one of them to improve. Payment history, add more accounts that you pay as agreed, and dispute and remove anything on there that is negative that shouldn't be on there that's adversely affecting your credit. Utilization, keep your balances low compared to your limits. I recommend it. And I ask, will you do a hard credit pull or not? If they will not do a hard credit pull, I actually come in and ask for a credit limit increase every 6 months, except with Discover. Discover will consider a credit limit increase every month if you ask them. So if you come in and ask for your limits to be raised, 90% of the time, the answer is yes, especially if those are credit cards you're using. That can help with your utilization. Inquiries, you are punished if you put an inquiry on your credit report and it doesn't turn out being an account that shows in your credit report. If I apply for a credit card and there's an inquiry and no credit card ever appears in my credit report, the bureaus don't like that. So first of all, minimize your inquiries. Start building business credit and get all the credit you need for your business without a personal guarantee, without a personal credit check. There's no inquiry there. Only apply for credit or loans that you really feel confident you're going to get, so you show the bureaus that an inquiry results in a positive account, a loan, a credit line, or credit card on your credit report. Because the better that linkage is of, yes, I have an inquiry, and yes, it resulted in an approval, the better my credit scores are going to be. Have a good mix of credit. 3 major credit cards, 1 to 2 mortgages, 1 to 2 signature loans, 1 to 2 auto loans. That's a good mix of credit that can also help you grow your business as well. And not a lot you can do to control the average age of your accounts. All you can do is get added as an authorized user to a family member's account, and that can help you in that area as well. So a lot of things you can't control. I just told you things that you can control, including utilization, keeping your limits low, and asking for limit increases. Okay, so those are really the keys there. And build business credit. You got to keep in mind that business credit scores, the main scores, don't even care about utilization. What they care about is payment history. So what happens is you don't want to use personal credit to fund your business, although it seems easy, because almost everything takes twice as long and costs twice as much in business than you think it will. So when you start putting business expenses on personal credit cards weren't designed to fund businesses. So what happens is you throw this utilization factor out of whack, and then what happens is your personal credit scores tank. Then when you need your personal credit for loans and credit lines, you can't get them because your scores are low because you used personal credit to fund the business. Stop doing that. Build business credit. By building business credit, then you're able to not affect your personal credit card utilization because you're using business credit accounts to fund the business, not consumer credit accounts. And again, keep your utilization, your balances as low as you possibly can on personal credit. Okay, average account of age, you can't do that. You can only get credit on the consumer side as fast as possible. Maybe if you don't have long-standing credit history, authorized users can help you. We talked about the right kind of credit mix to have as well. And you need to be monitoring both your personal and your business credit reports. You have to be. If you're not, then when you go to get money, it's, oh my gosh, I'm so surprised. Just like I told you the story of my buddy Wes. Ty, I can't believe this just happened to me. I went to get an auto loan, and all of a sudden my business credit's bad. I can't get it. What's on there? Well, this negative's on there. Well, how long has it been on there? For 3 years. Well, why didn't you know about it? I mean, why would you not even look at your credit reports for your business for 3 years? Now you need the credit, and now you get denied. And now you work on fixing the problem. And now it's going to take you a year to get the problem fixed to get back to a point where you can get that loan. Don't let that happen to you. Monitor your personal credit reports. Monitor your business credit reports. I monitor them regularly. I have alerts set up that tell me when things change. And that way you can see stuff on there that shouldn't be on there, and you could dispute it. You could see your scores. You can make sure that your credit's building, that you've got positive accounts on there. That's the key. If you're not monitoring your business or personal credit reports, you're going to be surprised when you end up getting denied or getting worse terms on credit financing that you don't know about. And by the way, it's not just these guys. It's not just DMB, Equifax, Experian. You need to get LexisNexis as well. LexisNexis is where the lenders get their info. Lenders, credit card issuers. It's where they also deal with insurance company, law enforcement. They're all using LexisNexis reports for their data. So get that LexisNexis report and clean that thing up. I could sit here for an hour and tell you stories. I could tell you how they tried to collateralize my home because of stuff that was on my LexisNexis credit report, which wasn't even accurate. I can tell you how they put a stipulation for me to pay off judgments of like $30,000, $50,000 that weren't even legitimate judgments. I didn't even know they existed, but they were on LexisNexis, and I had to prove that they weren't even legitimate to get past that stipulation. I can tell you about misdemeanors that I had when I was 20 years old by popping wheelies on motorcycles to impress female police officers, which was cool at the time. But then 20 years later haunts my ability to get an SBA loan, and I didn't even know about that because I didn't know about my LexisNexis credit report. I can go on and on and on about problems we've had and we've seen so many borrowers have because of issues on that one report. So get your LexisNexis credit report. It's 100% free. Okay, I'll show you how to do it right now. All I have to do is go right here and go free, if I could type free, LexisNexis, and there you go. If I just even started it, it automatically knows what I'm asking for. Free LexisNexis report. I don't want an ad. I'm going to come right down here to the first option. Hey, online request form. There it is. And if I fill this out within 30 days, they're going to mail me the report. No, you cannot get your report online because it's a book. Mine's 300 pages big. Okay, I've shown this before. I'll show it again. This is mine. Here's my LexisNexis credit report. Just knocked over all my pictures. We'll disregard that even happened. Okay, here's my LexisNexis credit report. Here's my finger compared to it so you can see how big this thing is. It's 300 pages. Literally, the thing is like a book. Okay, so you're not going to get this thing online. They're going to mail it to you. But again, that is going to be... I can't begin to tell you. We had all kinds of problems getting bank accounts, getting merchant accounts. Once we figured out LexisNexis was the root of all of it, we got LexisNexis cleaned everything up there. We've never had issues again with insurance, with merchant accounts, with bank accounts, with loan approvals, with credit card approvals, because we found the source of the info and fixed it at the source. Okay, when judgments used to appear on consumer credit reports, the judgment data didn't come from the courts. It came from LexisNexis. Okay, so you might think that you had a bankruptcy, a judgment years ago, and it's off your consumer credit report. Now nobody knows about it. That's not true. What happens is it's on LexisNexis indefinitely. If I had a judgment 30 years ago, it's still on LexisNexis. So you need to know that stuff so you can clean it up. That is the key to being able to give lenders and credit issuers what they want to see so you're able to come in and be able to get approved. Ty, you be given the game. I appreciate that. Thank you very much for coming in and joining us today. Okay, and financial, I love that name. What is it? Financial Gospel Apocalypse. You're my number one business credit mentor. Thanks for keeping me sharp. It's a gold mine for my team when I update. I appreciate that. Thank you very much. KC, thank you very much for saying you love as well. And Danielle says, I had a business in 2019, went to enter a new business venture. Should I change the name and all other aspects of the company to use the same EIN because of the seasoning? Look, seasoning doesn't help you a lot. And a lot of people ask me this, and it depends on the unique circumstance. I literally had dinner with a friend last night, and the conversation came up and said, hey, should I use this old entity that I had to run the business? Well, this old entity was with multiple partners. There was all kind of stuff involved. I said, absolutely not. You need to open a new entity. And the reason for that is that the old entity, okay, still had ownership interest. If that business took off and became a $100 million company, those other owners would be coming after you. So get a fresh start. So it really depends on your circumstance. If the entity's clean, if it's not in a high-risk NAICS, and if it makes sense, then yeah, I mean, you could do that. I think changing the name is not going to work because with the Secretary of State, there's a lot of things you can usually change. The name is not one of those things. So in this case, you might want to start over. If I was in that situation, I would probably just start over. It's easier that way, and the 3 years of seasoning really isn't going to go a long way to help you, it's not a lot of benefit by using that seasoning that they actually give you. Great information. I appreciate that very much. Okay. And a question here is, how do you clean up LexisNexis? Because I've tried in the past and nothing worked. I dispute to them. So LexisNexis, when they send you these reports, they also give you all of their information. So they give you all the information of where to send disputes. Okay, I think you can see that. And so what I do is I actually just send them a letter with what's wrong. And as much evidence as you can supply, the better. If you just send them a letter and say, this is wrong, remove it, or like the credit bureaus, you say these 12 things are wrong, remove them all, you might have an issue. But I'll give you an example. When I did my judgments and fixed them with LexisNexis, I went to LexisNexis. I took a page from the LexisNexis credit report. I copied it and sent it. I circled them and said, these are wrong. Here's the proof I have. And whatever proof you had, I had something from the actual county that showed these are real judgments I've had in the past. Look, here's my search on the county. These don't even show up. You can do your own search. Here's the URL to do your own search. I did the search for you. These don't exist. You've got stuff on there that's not true. How am I supposed to prove that something's not even there besides show you the actual county records you say you're citing and saying that they're not there? Now, here's what's interesting. LexisNexis not only removed 3 judgments, which never should have been there, but I even told LexisNexis, I said, you've got 5 judgments on here. 2 of them are legit. I didn't tell them why. I had a mortgage company that failed in the mortgage crisis. They were legit. I told them, I said, these 2 are real. These 3 are fake. I don't even know where these 3 came from. LexisNexis removed all of them. Even the ones I flat out told them were legitimate, they removed them all. So writing a letter with detail to LexisNexis of what's wrong, what's going on, supplying a report, circling it, and referencing this is what they've got to fix, they've got to adhere to the same principles of Fair Credit Reporting Act, which means it has to be 100% accurate or verifiable, or it cannot be on your report. Now, it's harder if you're not supplying any proof to validate that. That's hit or miss. They may remove it, they may not. If they validate it, it stays. But any proof you can supply, the better. I found that that's really the key to getting things removed from your LexisNexis credit report. And Ty, after you close out a UCC filing, I've been trying to get 3 off my report for a month now. How can you? Well, they answer the lender and tell them that. So the lender's the one that filed the UCC, and when the loan's paid off, they'll move the UCC filing. So for those that don't know what a UCC filing is, a UCC filing is basically a lien that the lender is placing on whatever asset you used as collateral for a loan. So let's say that my customers pay me on terms, it's called account receivables. Let's say I use that account receivables, that AR, as collateral to get an SBA loan. Well, then my lender is going to put a UCC filing lien on that asset and on my credit report. And that tells other lenders, hey, we already have a lien against this asset, account receivables. So if you come in and lend him money, you're taking second position behind us, which means if he ever defaults, we get paid first, you get paid second. So what is supposed to happen is a lender is supposed to remove the UCC filing when the loan is paid off. If they haven't done that, you got to go to the lender direct and say, hey, man, what's up? You say I have a lien. You still have a lien against my assets. You can. I paid that loan off. I need you to get this UCC filing removed. I need you to write a letter stating the UCC filing should be removed and that the loan is paid off and that you no longer have a lien against that asset. I never rely on them to do it. I make them do it. Then I make them give me a letter stating that they're going to do it. And then I send the letter directly to the credit bureaus to get it removed and wherever else it may be that it's adversely affecting you. Okay, so that's exactly how I found is the best way to do that. Okay, and get the info from web search because judgment and BKs aren't reported by the courts. Okay, so here we go. So Ty, even though they got the information from web search, the judgments and BKs aren't reported by the courts. You're right. Judgments and BKs aren't reported by the courts. Like I said, anybody that validates that, it's coming from LexisNexis, and this is exactly why the credit bureaus can no longer report that it's on the credit reports because or can no longer show judgments on credit reports because they got so much problems because it's not consistent with the Fair Credit Reporting Act. The Fair Credit Reporting Act requires everything on your credit report meet 3 standards. It must be timely within the statute of limitations. It must be 100% accurate and 100% verifiable. Okay, so if it's not accurate and verifiable, and it's their responsibility to prove it once you question it, it can't be on the credit reports. And that's, you can go to them and say exactly the same thing. Look, I never had these judgments. I don't even know what you're talking about. If the judgments really are not real, if you're judging judgments that are really not real, then what I did to clear mine up was I went and did a search in the county they said I had them, and I did a search in my name, and I supplied the whole search. I go, look, I did a search in Pasco County. They don't even show the judgment you're talking about. Where did you get this info? The county doesn't even show the judgment you're claiming exists. And with that proof, it was gone. So that's one way around it, and it's actually worked very well for me. I was able to get that off the same way, so hopefully that can help you as well. And I'll come back. I know you've got some other questions, but I want to move on, and I will make sure that your other questions are answered. So collateral, the last C before character is collateral, right? Buy assets with future financing in mind. So real estate, equipment, stocks, bonds, any of these things can be served up as security, as an asset that can serve as collateral. So stocks, bonds, 401ks, IRAs. You can also use equipment. You can use inventory. You can use commercial vehicles. You can use commercial real estate. You can use your customers paying you on term with account receivables. You can use purchase orders. These things are assets that can serve as collateral to lower a lender's risk. And I guarantee you that if you want the easiest way to get money at the best terms, pledge collateral. Have an asset you serve up as collateral. The more that you have that you can serve up as collateral, the better loans you're going to get. SBA's requirements are that you have to have collateral equal to the loan amount that you're getting. Okay, they want you to take every business asset, the lender, to use as collateral until it's equal to or greater than the actual loan amount you're getting. So the more assets you start accumulating in the business, the better off it's going to be for you to get financing. And the best asset you could do, the number one asset that's used for SBA financing, is account receivables. Let your customers pay you on terms. When you do that, it becomes AR, and that AR is the number one asset used to qualify for financing like SBA loans. So make sure that any assets you get, keep in mind, those all can be pledged as collateral to be able to get financing, and they go a long way to helping you get financing as well. Okay, now Gregory says, hey, first time here, I tried to get a report for LexisNexis, and they told me that they didn't have info on my company, so I had to supply them with info that I was legit, and that could happen. Okay, and this happens a lot because of other training that I have. And Gregory, you definitely want to take a look at my fundability training. So if you go to youtube.com/credit suite or just search fundability, look at my fundability training. What you're describing is a very common problem. And it also is exactly why you're probably struggling to get loans, credit cards, and credit lines. As a matter of fact, all of you need to pay attention to what Gregory said here, because this is the number one problem on why people do get denied for financing. So I'm glad he pulled it up. Okay. What he's saying is, hey, look, I tried to get the report. They couldn't even validate my business. I had to send them proof. Here's why. You've got incongruent information everywhere. The information you put when you submit to LexisNexis, you put on an application for credit or financing, it's not the same as they're finding online. It's not the same as Google My Business. It's not the same as Yelp, your social media pages, your web pages, the IRS, okay, the Secretary of State. That information has to be congruent. If there's one thing I can tell you for your business to have character and meet that fourth C, it's that your information has to all be congruent, but it's not. And I'll tell you why. Because your average business owner comes in and they set up their Secretary of State record first. Then they get a business address. Then they get a business phone number. Then they get their website and their email. And they never think to go back and update Secretary of State records. So lenders and credit issuers come in and try to validate the information, and nothing on the app matches what they're finding. They have a company name that's the same, but the address is wrong. The phone number is wrong. The NAICS code is incongruent. All these incongruencies throw up fraud alerts in their system saying, we've got a mismatch here. I can't even validate this business even exists. This happens all the time. Now, we're partnering with places like LexisNexis this year in 2022 to roll out a fundability score that will look at all this for you. It will look at all your incongruencies and score your fundability. Then the more of these incongruencies you fix, the higher your fundability score will be. So that way it will get you maximum approvals and maximum funding. But until we roll that out, you got to kind of do it manually by going and getting your IRS records, looking at your bank account records, look at your social media pages, your website, look at your Secretary of State records. Does all this stuff match? Do you know what industry you're in? Do you know your own NAICS code? One of the biggest mismatches I see with LexisNexis is that you're telling them you're in an industry that they can't validate because you don't know what your own NAICS code is. And one of the easiest ways to fix that is just go to NAICS.com. So if we come here and we go to NAICS.com, NAICS, I cannot spell today, and I go right here to the top right, find your NAICS. Here's why it's important. Somebody asked me on a live stream the other day, said, what's the NAICS for transportation? Look at this. There's 100 subcategories of transportation alone. So if you don't tell somebody when you apply for credit that you're a taxi service, NAICS 485310, and you just say you're in transportation, then what's happening is they're choosing one of these that they think may be right. Then all of a sudden you got a bank that says you're in this NAICS code. You've got the credit bureaus that say you're in this NAICS code. LexisNexis thinks you're in this NAICS code. And these incongruencies create issues where they can't find or validate your business. So all of that will help you, Gregory, solve your problem, especially figuring out what your NAICS is. When I come to LexisNexis incongruencies, that is one of the bigger problems that I typically see. My BK is still showing on my credit reports, even though I've shown it can't be verified. Depends on if it's your consumer credit reports or not. But you want me to tell you how to fix this? I'll tell you how to fix this right now. Dispute it with LexisNexis. Guess where they verify BKs? TransUnion, Equifax, Experian, they verify them with LexisNexis. So I see this happen all the time. People try to dispute with TransUnion, say, well, TransUnion won't remove my BK. They verified it. Yeah, you know who they verified it with? No, they verified it with LexisNexis. Did you dispute with them? Nope, that's your problem. So go to LexisNexis and dispute with LexisNexis. When you get it fixed on LexisNexis, then go back and dispute with the main reporting agency, TU, Equifax, Experian, and you will be able to get it removed when you get it removed from LexisNexis. Time in Hillsborough County, me too. Who do you recommend to talk to about an SBA loan? You can go to info@creditsuite.com, but here's my guy. Let me see if I can pull Jason up here. This is who I would go through right here, and let me see if I can pull him up, and you can take a screenshot. Here's my guy, Jason Keys. He's the guy that I send our SBA loans to. I got another guy. His name is Vladimir Mercedes, but I would call Jason. So take a screenshot right here, linkedin.com, in Jason Keys. And then go to Jason. Jason's the man when it comes to SBA loans. Now, you can also go to us. All you have to do is go to info@creditsuite.com. And if you email info@creditsuite.com, we will help you through that process at no cost. It doesn't cost you anything for us to help you. Okay. And our team will help you through the process of getting an SBA loan. And even if Jason can't help you, we will connect you with another source that can. Okay. Or ARS, because they report BKs as well. Okay. So hopefully I've answered that question. So to recap, lenders look for one of the 3 C's: cash flow, credit, or collateral. Okay. Managing that cash flow is vital. Keeping credit healthy is important as well. Having some kind of assets that can serve as collateral and making sure the character of your business is set up right, that is very important as well. And if you have those 4 C's right, well, then you figured out the magic of formula to be able to get loans approved. So if you want help along the way, give us a call, send us an email. When you set up a finance assessment with us, it's 100% free. We do a fundability check. We look at stuff like Secretary of State mismatches, the stuff that lenders look at, and then we tell you what to fix so you can avoid the issues and get approvals. We will also get your business credit reports for free if you have them established. They cost $250 from the bureaus. We get them at no cost. We go through this with you. Don't get me wrong. We pay for them. Cost us money. Cost you nothing. We get them for you for free. We review them with you and give you tips and tactics to improve your business credit. And we do a financing assessment for you. We determine the financing you can get right now. And if it's cash flow financing or collateral financing or an SBA loan, then we help you through the entire process of getting approved. And we don't charge you a dime to get financing. So all you have to do to get that finance consultation is give us a call at 877-600-2487, email info@creditsuite.com, or schedule online at creditsuite.com/consult. And did you get value here? If you got value, if you walk away and go, wow, like I did not know that stuff, take 1 minute, uno minuto. Go to creditsuite.com at the top right of our pages, pull up a social, and just like and subscribe. Okay, and here's why. We have daily tips on Twitter or on Facebook. We've got 1 minute videos on places like Instagram and TikTok. We've got 30-minute to hour-long trainings on places like YouTube. thousands of them as well. And we've got a podcast where you can listen to on the go, where we have experts come in that actually teach you everything you need to know to grow a business. So all of that can be accessed at the top right of our page, creditsuite.com. And just hit the like button, please. Do me a favor. We put a lot into making sure you have the education. All we ask is for a like, because when you tell Facebook, I like this, Facebook goes, maybe other entrepreneurs will like this. And it helps us help more people and me and actually accomplish our mission. So if you like and subscribe, and that way we can talk to you next time where we go live and Tuesday and Thursday at 1, 11 o'clock on Wednesday to talk to you about how to get money for your business. Okay, so do you assist with grants? We do not right now, but I'll tell you, Chris Johnson is the best guy out there. And by the way, we are actually doing right now a survey for our clients to see if they want us to help with grants. So this may be something that we do in the future, but this is the guy to go to for grants. His name is Chris Johnson, grantfundingexpert.org, grantfundingexpert.org. He may even give you something special if you tell him that Ty at Credit Suite sent him your way. He's the best guy out there. Okay, so I'm going to go ahead and wrap up. Thank you very much for tuning in. I really appreciate you taking the time to join us today. Look out for our next training, which will be tomorrow at 11 o'clock Eastern, where we talk about more cool ways to get the money you need to start and grow your business.